Hello and welcome to My Finance Teacher. I hope you guys are having a nice day. I know I am having a nice day, and partly that is because of you guys, and I want to thank you guys for that. That's partly because I have an impression that the number of comments that I receive on the videos is gradually increasing. I'm not sure if data actually supports that. Maybe it's just my feeling. And that really makes me stoked that there is some sort of interest to the videos that I create. And on the opposite side, I'm also quite interested to find out your opinion on some of these topics we look at. And today I want to look at US dollar and at its longer term cycles as I see them. So in front of us is a monthly chart of the DXY going back all the way to 1971, all the way back to the time when Nixon severed this connection between the US dollar and gold. What I see on this chart is some sort of really long cycles. Let me call them, well, say super cycles. One of them here, for example, lasting between 1978 and something like 1992. That gives us 14 years in that cycle. The next one finishing at about 2008. That gives us around 16 years in that cycle. So on average, around 15-year cycles seem to be shown on this chart. Since 2008, since that bottom in 2008, US dollar has already strengthened by about a third, by more than 33%. But since then, over 10 years have already passed. And if the pattern continues of 15, 14, 16-year cycles, it means that we don't have that many years left within the current cycle before it has to enter its declining phase. And what I want to look at in slightly more detail is whether dollar has already entered its declining phase, meaning that the recent 102 or 103 level on DXY in the end of 2016 might have been the top for this cycle, and dollar is destined probably to go down over the next several years. So what I want to do is I want to zoom in on the recent years, and I want to have a look at several factors within that zoom. One of them is this interest rate hike. Since December 2015, the Fed started to increase interest rates. And what happened to the US dollar in the same period is, funny enough, since December 2015, this is a weekly chart of DXY, dollar has actually lost nearly 3.5%. Although a Fed rate hike should have made the dollar relatively stronger to compare to other currencies. And it's not like anybody else in the world, any other central bank in the world is tightening more than the Fed at the moment. Let's look at Euro, for example. That's one of the largest partners for US and one of the bigger contributors to the DXY index. Compared to December 2015, Euro has grown by 4%. Again, although the Fed has increased the federal fund rates. Next, let's look at Chinese yuan. Since December 2015, it lost 5 or 6%. But China has its own troubles, and probably Chinese yuan is not the best example to illustrate what I'm trying to say. One of the things, again, to repeat, I'm trying to say is that the US dollar is not strengthening against, let's say, Euro or many other currencies, although the Fed is increasing the Fed funds rate. And that, I think, is one of the possible indicators that the current, again, let's call it a super cycle, has already topped at the end of 2015, and it's entering the declining phase. And another factor that I want to look at is the general stock market performance. Again, let's have a look at the US versus Europe. So this is S&P 500 in front of us, weekly chart of S&P 500. And since the end of 2015, S&P 500 has gained nearly 24%, 24-25%. Let's have a look at some of the larger markets in Europe. Over the same period since December 2015, German index has only gained between 1 and 2%. The European index has gained only 12%, which is still less than what S&P 500 gained. And finally, the French index has actually lost around 3%. So it's not like the performance of stock indices in Europe is much better than in US, contributing to this dollar weakness. Not at all. On the contrary, US market is doing well, and despite all of that, US dollar is still lower than it was when the Fed funds rate started to increase. And finally, if indeed we're going to see the US dollar weaken over the next, well, let's say 4 to 5 to 6 years, what do you think that will imply for things like gold, crude oil, or other commodities? What will it imply to the stock markets in US, for example, or European stock markets? Let me know your opinion in the comments below, and I'm looking forward to read your comments. Thanks for your attention, and again, have a nice day.